Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Today we'll take a look at the euro currency. The euro currency is a bit specific situation because in the long-term perspective we see and have the clear targets. So we expect the deeper action to the downside on the euro currency. Our long-term target is the parity. In the short-term perspective, we expect to reaching of the 104, 104.50 area. So approximately around these lows. But on the short-term perspective, situation is a bit blur because euro currency doesn't form any clear patterns that could make easier the task to find the acceptable point for taking the short position again. So before this moment we have two possibilities for taking the short position. We have discussed this. First retracement was to the trend line. That was the second retracement to the 108. So also we discussed, recall this trading of the euro currency that we have taken on the previous week. But for those of you who do not have the short position, now probably you should be focused on this most recent swing for a possibility of taking short position on some retracement. Our short-term targets, short-term patterns has been completed because market has dropped lower. This grabber that has been formed on Friday, this one has worked nice. So you consider this lows has been taken out, and the fact that market stands below these lows suggests that probably euro could continue move lower. Also, in the favor of the bearish continuation, we see other moments. First of all, market has broken all supports levels, all FIB support levels that was from this low to this high. The 618 area was somewhere in this level. So market also has dropped it, dropped below it. The action to the downside, as you can see, very fast. So it's really thrusting action here. Also, market has dropped below the monthly pivot support one. That's also bearish. That's why in the medium-term perspective we could watch for reaching of this area. Also take a look that market is not at oversold. So in fact, between this area and that area, market stands in the free space. So nothing, no real significant support level stands in this area. Also, guys, when the euro currency has such feature as very small retracements on the thrusting action. So if you'll take a look at the high time frame charts, the monthly chart, you could see that when the market stands, when the euro currency stands on the march, it shows very minor retracement, usually 3/8 of the most recent swing. So you can see even on these examples of thrust, minor retracement, thrust, minor retracement. So here, if market will show any retracement, this will be also probably not very significant. On the 4-hour time frame chart, guys, we see that market is forming some kind of the downward channel, although it is accompanied by the bullish divergence. But if you would like to rely on this divergence, I think you should be extra careful. Well, usually I take a look at the divergences only if they form around strong supports. So if it's bullish divergence, if the bearish, it means it's around resistance. And usually when I see the signs and I expect the signs of the possible reversal or some deep retracement, usually if divergence is accompanied by some reversal pattern right at some destination point, only in such moments I take into consideration the divergences. In all other moments, I usually ignore it because if you deal with the divergences incorrectly, you could confuse the divergence with the dynamic pressure, and they are opposite. It's opposite patterns. Since we do not stand at any support, market right now hasn't completed any targets, any extensions. I think that this divergence is minor one, and maybe I do not think that we should somehow pay attention too much to this divergence. Mostly we are standing right now on the downward channel. Let's try to estimate where this retracement, some retracement could happen. So for that purpose we need the hourly chart. I right now see only one tool that could let us to estimate the short-term target. First of all, take a look at the harmonic retracements that market is forming right now. On the way down, so we could take into consideration this harmonic retracement, and when the market will start the next retracement, we will try to use it. Currently, guys, in very short-term perspective on the current week, we probably could watch for this thrusting candle. You could see that this thrusting candle range holds the following action almost for a week. So that was on the 5th of November, and breakout has happened only 16th of November. So even 2 weeks, almost 2 weeks, market stands inside the range of this candle. Usually, when market breaks the range of these long candles, it has the tendency to show the same distance in the direction of the breakout, and that will be approximately around 105 area. Probably, at least theoretically, we should not see any meaningful retracement until market will reach this area. Maybe even it will reach lower level, because in this case it will probably gravitate to this level because the difference is very small. It's approximately around 50 pips. That's why the short-term destination will be somewhere around 105. At the same time, market could retest this lower border, and that will be some kind of the test of the quality. So we would like to see from the bearish perspective that market will reach this area, retest this broken range, and then continue move lower. Because if market will return right back up inside of this range, it means that the upward retracement could happen and the deep bounce could happen. From the bearish perspective, we do not want to see it. That's why I keep watching for this possible action. The short-term target probably will be the destination around 104.50, 105 area. Maybe it will be reached on the current week, maybe on the next week. And in fact, currently nothing else we could estimate on the euro currency. So, because as you can see, action is very gradual. No some clear and bright patterns have been formed here. We have the clear picture, as I said, on the high time frame chart with this destination point, but on the lower time frame, it's really not much to watch for. So that's why probably you could watch for some retracement if you do not have the short position, with trying to take the shorts with the target around 105, 104.50. And the first possible area where this could happen stands around 107. This is lower border of this consolidation. Just control that market will not return back inside of it. So, as a confirmation of the real bearish intentions of the market, we need to see that the market reach this area and then continue move lower.